All right, we're live. Hello, YouTube. We're going to go live on Facebook. We're live on Facebook. We're good? We're live? We're good. Ladies and gentlemen, Amazon earnings. Need I say more? Everything you need to know about it, and why my answer might surprise you. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So we have probably going to be the biggest earnings week this week. We have basically all the FANG names reporting after Netflix. We have Facebook this week. We have Amazon this week. We have Google this week. Apple is actually next week. But I wanted to really dedicate this show to Amazon, what you could expect, why I'm looking at it here, why I'm analyzing it here, besides for obviously being one of the largest companies on the planet. But I find it very interesting here with Amazon because we're just in a very interesting spot with this stock where we look like we were going to go through those all-time highs there. It just never was quite able to do it. The all-time high, of course, being $2,050.50. We climbed up to 2,035, and then we just suddenly took this 70-point breather. I did a video right over here on this day saying why I ignored the long. The stock actually fell pretty nicely from there. I didn't catch it to the short side, but I definitely was thinking of buying in right over there, if you remember, on the Amazon Prime Day right there on July 15th. Then I did a video saying, nope, not going to do it because of this Bollinger Band. And you could see that it's actually currently working from a technical perspective. But I don't want to really talk technical perspectives here of Amazon. I want to do more deep analysis of Amazon. I want to break Amazon in a way where you know what you can expect, all right? And I think you could sum these up with I'll give you my thoughts, but I'll also like to present you a question. And if you care to join in and share your answer, you have all night to do it. But here's the question. Here's the ultimate question. If Amazon does if Amazon does this on earnings in terms of reporting, if this is done at Amazon, then I expect this on earnings day. And I'm going to show you exactly what I mean, and I'll be the first to fill it in. So, first off, it's kind of hard to see the Amazon revenue because the low end missed revenue, the high end actually beat revenue. So, Amazon projected this week's earnings last quarter. And what they did was they said 59.5 billion to 63.5 billion. That's 61.5 billion in the middle, and the consensus is 62.37. This is where I think it's going to be interesting. They reported Amazon Web Services net sales of $7.7 billion. I mean, just absolutely incredible. And if you don't remember what happened on Amazon last time they reported, um, the stock had a small gap up and tried to hold up. Right here is actually the last time they reported earnings. It doesn't look like anything special on the chart here. They closed here on the 25th. They reported earnings and they opened up about $26 higher, which is not really a lot for Amazon considering that it moves in the hundreds. Now, I'm going to fill in the following, and then I'm going to tell you why I feel that way, but I'd love your opinion too. If if Amazon reports the Amazon Web Services, to me, that's the important number because that's really where the future is. They are just really, they are just really growing that sector exponentially. And there's a little company, which is the most valuable company on the planet right now, publicly traded company, is actually Microsoft, obviously. And you saw what happened to them on Friday. They gapped it up to all-time highs, ripped it lower. We were actually playing that short intraday after the open and worked out decently the moves. We can go over the technicals of that later, but I want to just take you back more importantly to the Amazon Web Services, the Microsoft Web Services numbers, and it's basically the intelligent cloud revenue, if you will. It's funny, one is Amazon Web Services, this is the intelligent cloud because when I think of a cloud, I think of intelligence. So this is the IQ cloud. $11.4 billion. Their revenue was up 19%, up 21% in constant currency. You know what that means? You know what that means? Let me explain that in English for people who don't get it. What does that mean that it increased 19%, they're up 21% in constant currency? You know what that's saying? This is what it's saying. It's saying, hey guys, if you just go ahead and look at the Chinese dollar yuan, and basically, yeah, our dollars were phenomenally inflating for a constant currency. Constant currency, they use the word constant to show you that there's not a lot of currency volatility, which there obviously is. So very soothing words coming out of Microsoft there with their constant currency. All their cloud services revenue increased 14%. To me, that was just absolutely huge. And I just want to take a line from the Microsoft CEO, and this is going to, and then I'm going to give you my price target on Amazon, which you're going to want to hear. Um, Microsoft CEO says, Satya Nadella, it was a record fiscal year for Microsoft, the result of our deep partnerships with leading companies in every industry. Every day we work alongside our customers to help them build their own digital capability, innovating team, yada, 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 yada. Here is the key. This commitment to our customers' success is resulting in larger multi-year commercial cloud agreements. Larger multi-year cloud agreements and growing momentum across every layer of our technology stack. I will give you a guess. If you would guess, just a guess, if there is one company, just one company out there who you think could compete with Microsoft's intelligent cloud, what do you think it is? It's obviously Amazon. Absolutely. If you remember the IBM earnings being so solid over here and shooting up, they also reported good cloud revenue. Cloud revenue is the new sex appeal of Wall Street. That is the new sex appeal. I could remind you there are times where drones, building drones was sex appeal, and then artificial intelligence was sex appeal, and then triple D was sex appeal. What do I mean by sex appeal? And then fuel cells were sex appeal. Oh, remember when Amazon took a stake in Plug Power, the fuel cell company? And then they just wanted to see how that was working. Are they going to change energy of the future? Never happened yet. Never took off in a meaningful way. Who knows how long these cloud revenue contracts will come in? But I can guarantee you one thing. You see, it's called the law of simple numbers. It's not a real law, it's a law I made up. It's the law of simple numbers. Some people out there would say there's a McDonald's and a Burger King, right? You know, the McDonald's is 2 blocks away from a block away from a Burger King. If McDonald's reports at that restaurant, which they don't report on individual restaurants, but let's say they did, if McDonald's said the one restaurant was amazing, the amount of burgers there sold doubled, etc., this sold more French fries, more this, more that. If the McDonald's said that, would you think the Burger King revenues would be the same, better, or worse? What would you guess? Let's hear it. Let's hear it. What would you guess? If the McDonald's down the block from the Burger King is doing great, would you say the Burger King is doing better, worse, or the same? Pat worse, Rick worse, Ken better, Jose better, Dennis better, Brian the same, Amy better, Ron worse, Rich the same, Earl better, worse, worse or the same, Diana, Conrad better, Bojan worse, Earl better, Greg better, Mike better, Josh as good or better? You want to know the true answer? The truth is, it's a blanket statement and any of your answers can be true. But the most logical answer is that they're doing better. Because odds are the Burger King didn't, you know, aren't selling rat meat burgers that the whole town found out about and now never go there and go to McDonald's. That's not the reason they're selling more burgers. And me saying they sell twice as many burgers is obviously a tremendous exaggeration for a normal food chain, burger sales and whatever. But basically, it means people are buying more burgers for whatever reason. And if they're buying more burgers, I can guarantee you the grocery store in between that McDonald's and Burger King is doing real well selling their ground beef and selling their hamburger buns. They tend to move cyclically together. The point I'm bringing it up about now is that Microsoft's cloud revenue is setting records. Do you really think? Now I'm going to repeat the same question using the real analogy here. Not a real analogy, the real underlying fundamentals of the analogy. If Microsoft's web services are doing good and IBM's web service is doing good, do you think that means that Amazon's web services are doing better, worse, or the same? You want to make an argument that people are just leaving Amazon. They can't take that company anymore. After their last Amazon Prime sale, you know, Mark Melnick didn't want to buy 12 phone chargers for $136, 20% off. Oh my God, what's wrong with that company? Ah, now you're saying it. Better, can better, better, better. So my prediction is that Amazon, people didn't stop liking Amazon. In my humble opinion, which is the obvious fact here, and I don't think you would disagree at all, you couldn't. Likely people just need more cloud services. That's the reason why they're doing better. Not because they're stealing all this business from Amazon per se, and there's no growth behind Amazon. So Amazon's numbers on their web services are going to be phenomenal. And I believe their revenue number is going to be in the higher end of the range. That that is the spicy twist. That's what nobody out there is telling you right now. Not that they'll beat, but actually giving you the underlying reasons why I feel their revenue is going to crush it. So they said they're going to do again 59.5 to 63.5 billion. They screwed that up completely. They're wrong. It's going to be in the upper end, maybe even higher than 60, depending how good the cloud revenue is. I'm assuming it's going to be phenomenal. My target on Amazon, $2,100. $2,100 and beyond, higher than that. I mean, initial. And after it gets to 2,100, I would say, maybe around 2,150. Now, here's the thing with Amazon. You might say, well, Mark, when was the last time Amazon, gapped up 136 points? And the truth is, I'm going to be like, well, I've seen them gap up 80, 90 points, I think 100 before, but for me, if you're going to gap up on earnings, you have to break 20, 50, 50. That's $2,050.50 right over here, done on September 4th from last year. That's before the whole market came in. That's when Amazon hit $2,050.50. Because the cloud revenue from Microsoft was so good, because the cloud revenue from IBM was so good, I cannot imagine them exceeding analyst expectations on their own cloud revenue. And that would be my deep due diligence across here. I think they're gonna really destroy the consensus earnings per share because each one of those shares are tied into the cloud revenue. There is one negative I will say about Amazon. There is just one negative, and I think it's more of a personal problem. It's that stupid internet tax totally turned me off from buying stuff from Amazon and eBay. However, my wife and I, we have the same Amazon account. Every single second I see my phone pop up and it's like, uh, congratulations on your Amazon order. Can you rate your experience? And I'm like, oh my God. So she still loves it. I mean, look, I love it too. I just started using them less randomly. It's kind of funny. We drink Fiji bottled. We have like when we have bottled water, we have the Fiji bottles. I don't know about you, but I would be the person who had to take like five, six cases home because I didn't want to just keep buying like heavy boxes of the waters, the 24 bottles in the little cases they come in. Do you know that I go on Amazon, I order the Fiji bottles of water, they deliver it they deliver it to my door cheaper than it would be for me to drive to the supermarket, load it in a car, push it out to my car, load up the car, drive it back, load it in to the house from the garage like that and like carry it in. They'll bring it all the way up to your doorstep. I know the delivery guy hates me. I know he hates me all of a sudden. I know he's sitting there like, oh my God, what did he order? Elvis's dead body again? And I know that, but I'm just sitting there you know, like, bro, I'll hit you up during Christmas time, but I'm ordering my waters now. But with that being said, I just find their Amazon Web Services business just absolutely phenomenal. They said their usage growth is higher than revenue growth in AWS. AWS will always be a lumpy business. They're happy with the growth. They say their cloud is a 30 billion a year business, not expecting diminished returns in any business. One day delivery pledges a global goal. This is from last April, April 25th, when they're announcing earnings. Continuing to see strong growth in China. Has been experimenting with many delivery options. I will tell you, that's all good and stuff, but this Amazon Web Services, all these companies that have been benefiting with the higher market, people are always like, oh, the market goes up, but the average person isn't making more money. And it's like, people will say that, but here's the thing, the average company is making more money. This is not about you and I. These are about public related entities which are phenomenally benefiting from a higher stock price. And you might sit there and say, well, what does a higher stock price do? It helps everything from their credit to raising money to to incentivizing your workers. Amazon incentivizes workers. A lot of them get shares of the company. And if you're giving somebody shares of the company, would you rather have a $500 market price or a $2,000 market price? You get to give your employees more just by giving them the same thing you would normally give. Your shares are worth more. You could even give them less shares and make them happier. So the point ultimately here is their web services are going to carry them a lot better because I want to show you something. Here's where they reported April 25th as well. Check this out. This is April 25th, right over here. The stock closed at 1902 and a quarter. It's pretty much right over there right now. That's not a real trend line. I'm just using that as a basis for where actually 1902 and a quarter would be down here. Down here. So you pretty much haven't moved significantly higher from where this was, from where you were on April 25th, right over here. You're pretty much not that much higher. And I think with the inevitable increase in cloud revenue, they're going to gap it up. Now, I'm not insinuating they're going to move it higher or lower throughout the day. Heck, they could gap this down. I feel we have this really awesome strategy that works. If you watch the Newsbeat Live Evolutionary Gathering, we show you actually a strategy that's been working on like pretty much every earnings name. Now, why is that important for you? Well, this is when I said it's going to be a big earnings week, I wasn't kidding. Triple M, Google, Amazon, Starbucks, Intel, Snapchat, Whirlpool, Ameritrade, Visa, Coca-Cola, Chipotle, Boeing with all their drama, Lockheed Martin, Biogen, AT&T, Caterpillar, UPS, JetBlue, Facebook is reporting, Tesla is reporting. No better time. No better time to start really learning these algorithmic strategies down pat and applying them to make your little consistent money every day. That is the goal. Oh, and with names like this, little could be as large as you want. I was speaking to one person over the phone on the weekend here in the room, and he's like, I just don't think he's like, I don't think people get it. He's like, you could take like 300, 400 contracts of some of these names, drop like 15, 20 grand on options. And it's like you call these little bottoms in the triple Qs and, the Qs move up, whatever, 20, 30, 40, 50, 60 cents. He's like, maybe I just catch 10 cents of that. And he takes a few hundred contracts, you make $3,000. He had a phenomenal week last week. He made over 40, I think it was like just under 50 grand, like $48,000 he made last week using algo levels. Using algo levels. Which algo levels, you might ask? I'll show you the algo levels. These algo levels. These are tomorrow's levels today. They don't always hit, but when they do, I tend to have an easy time making money by buying through support on shares or calls, or shorting through the resistance level through shorting shares or buying puts. Again, these levels don't always hit, but when they do, there is ample opportunity, consistent opportunity to make money. And I guess that's basically it. For the most part, I think Amazon's going to crush it on the Amazon Web Services. I think they're going to be on the high end of revenue range. I think Amazon is directly benefiting from everything that has been happening in the market. And I think we're going to see all-time highs. I hope you guys enjoyed the Newsbeat show. Happy trading, make money. We'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.